Hey traders and investors, it's Serge Berger here. I got a lot of questions on Whole Foods. I guess it was last week on after the stock it was completely torn apart after the earnings report, and of course it's a very widely held stock, so people are wondering what to do with it now that it's basically broken. So let's have a look at it. Very straightforward analysis on a very straightforward chart. So first of all, of course, we all know Whole Foods is a great, or has been a great growth story, and I guess as that growth story is at least temporarily sort of coming to a halt, the stock is mean reverting, and mean reversion here can really mean going quite a bit lower. So from that point of view, we can draw a very simple and straight support line, more or less. All we want to do is you know, kind of match up the most of these points here. You can see the stock, basically broke a major support line here after the earnings announcement. I guess it was last week or so. So again, this line doesn't have to be perfect. It's more about connecting the lower dots. As you can see a very clear area of support that has been broken. So with the stock completely falling apart, you can see all the moving averages of 50, 200, and 100, sort of the medium-term moving average I like to use. And by the way, it doesn't matter if for this perspective, if you use exponential ones or simple ones. It's just because to get areas of reference. You can see they're all way above. So from that point of view, the stock could potentially rebound. But what people are really more interested in is sort of what to do over the course of the next couple months. I think the stock for now is broken. Okay, can it rebound a little bit? Absolutely. But I think after a move like this and a significant breakdown, there is a very good chance that there's some retest of at least the lows from the earnings sell-off, which is I guess somewhere around 37 and a quarter. If not below there. So the stock, you can see the stock hasn't really done anything. All it's done is consolidate this or in a sideways pattern over the past few days since earnings. So it's not trying to sharply bounce back, and that for the time proven, essentially the stock is in this case is guilty until proven innocent. Okay, as opposed to vice versa with a good stock. This stock is completely fallen apart and really would need to rally quite a bit here and build a better bottom in order for us to be able to be more constructive on it through a swing time kind of swing trading time frame of at least sort of a couple of weeks. But it's not doing that, so I do think there's a chance the stock's going to lower. So if you're an active trader or even an active investor, I think this is an opportunity to kind of give a couple of cute short tries at the stock when it falls below this base here, which is around 38.90, 38.80 maybe. You can use the other side of the highs here, 39.80 or so, as the stop. And also, by the way, if you're interested, there is a head and shoulders pattern for those of you that really want to get technical on this stuff. But I think it doesn't have to be that technical. It's very clear what's going on. The stock is basically broken for the meantime. If and when the stock rebounds, I think you'd have to see this come on good volume. You'd have to see some sort of a bottom building. Then the stock might be ready to buy again. In the meantime, the stock is broken, and it does favor a little bit more to the downside. Hope this makes sense. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Take care.